Hello everyone. So a lot of people had been asking about updates on my PMS fund mutual fund portfolios. So in this video, I'll quickly walk you through all of my equity portfolio, including direct stocks, ULIPs, mutual funds, multiple mutual fund portfolios, and PMS funds. So first, a quick overview about the different funds that I have. So there is one PMS fund. I invested in this around 6 months back. There are three mutual fund portfolios. One of them is self-managed. My wife started investing in it. It is almost 7 years old now. And two mutual funds are professionally managed. These are 3 years old and 4 year old, respectively. One is ULIP. I do not wish to include it here, but since it is stock linked, so I'm just adding it here. If you don't want to see it, you can just ignore this part. And the fourth is direct equity. So I don't invest in stocks directly. It is my father who does this. He does this as a hobby. He started this as a hobby 3 years ago, but now it has become a very substantial amount. It is as big as any of these mutual fund portfolios. So starting from the PMS fund, it has been the worst performing asset in my equities, quite opposite to what I expected. But yes, this is how it is. So quite disappointed the way how things have turned out. But yes, it's a learning lesson, I guess. As of now, I'm invested, and because the absolute gains are quite down, I cannot even think of exiting the fund as of now. At least I'm not comfortable with that. So I'm still waiting, perhaps 6 more months or so, and then I'll see what the state is. So next are these professionally managed mutual funds. These are managed by a mutual fund distributor, and this is the CAGR that we are getting post fee. Right? In terms of absolute gains, these are 40 and 30, and these are SIP based mutual funds. So these are not lump sum; these are SIP based mutual funds that have been going on since last 3 and 4 years. Then comes the ULIP. So ULIP has also seen an absolute gain of 40%, but this was a lump sum investment. That is why the net CAGR is quite low. This ULIP was perhaps the first investment that I made, and it was the usual trickery by the bank people. We did not know anything about how the stock markets or mutual funds work. And because I was so disappointed and angry with this particular investment, that it acted as a turning point for me, in the sense that I started giving this more time and started feeling more interested in investments. This is a 10-year policy and it has been 4.5 years as of now. As soon as it reaches 5 year, I plan to exit this and invest it in some more sensible products. Now, these are the two self-managed mutual fund portfolio and direct stocks. As you can see that this was started by my wife, so this is not mine as of now, but that's why this one is the oldest one. So she was the one who was most comfortable with finances, and you can see that the CAGR that she is getting is better than anybody here, and these are the kind of gains that she has achieved. And on similar lines, these are the stocks. So my father did not have any experience or interest in stocks or finances. Post retirement, he started dabbling with stocks and started learning and reading more about these. And he has been doing pretty fine. I've not mentioned the CAGR here because we keep on taking out money from here as well. So it is difficult to calculate the real CAGR, but this figure is pretty accurate that in 3 years, the net gains that we have seen are almost 100% of the invested amount. It is important to note that this figure is pre-tax and after all the fees and everything. And because he has been doing so well in direct equities, gradually this part of the equities portfolio is also getting bigger every day and every month, and soon it might surpass any of the mutual fund portfolio here. So when I was working these numbers, as you might have seen that the professionally managed equities are doing far worse as compared to self-managed equity portfolios. And to me, this brings the question whether I or investors should go for professional help or not. Now, despite my PMS fund doing so bad and our mutual fund portfolios or equity portfolios doing much better than the professionally managed mutual fund portfolios, I still think that the value that professional financial advisors or mutual fund distributors bring on the table is far better than the cost that they take or the charges that they take, because you don't have to worry and look at your portfolios. I know what kind of time and effort and work my father is putting in stocks to get these kind of returns. So yes, ultimately it is a personal call. It is more about what you value more. I still think that professional help is highly undervalued. But as you can see from this table and the performance of my PMS fund, that you might end up with bad professionals or bad performing funds as well. So you have to take that into account as well and invest accordingly.